Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, oil prices, as we heard just a minute ago, $130 a barrel overnight, since coming down from that level, but that was the highest in a very long time, 2008, when oil hit $137 a barrel. U.S. lawmakers, it seems, though, want to ban Russian oil, which would send prices soaring even higher. Though the Biden administration, it's not clear if they're completely sold on that idea. What's happening with oil prices, Professor?
Geopolitical factors are dominating international oil market. Recently, Dubai crude oil price increased up to $120 per barrel level from $92 per barrel of the before Russia's invasion into Ukraine. The price of oil jumped more than $10 a barrel Monday as the conflict in Ukraine deepened amid mounting calls for harsher sanctions against Russia. Oil prices came under additional pressure after Libya's national oil company said an armed group had shut down two crucial oil fields. The move caused the country's daily oil output to drop by 330,000 barrels per day. And U.S. House Representative Speaker Nancy Pelosi said the House was exploring legislation to further isolate Russia by banning the import of its oil and energy products into U.S. All these mean a global shortages of oil, and until the end of the war in Ukraine, there is a possibility that oil price reaches higher than we expect now, like over $140 per barrel. Higher fuel costs are devastating for Korea, which imports almost all its energy.
Well, that leads to higher prices all around, and all this does seem is the cause of Wall Street seeing stocks plunge overnight, more than 3.5% for the Nasdaq with its tech companies. What's the story in the global equity markets?
U.S. markets were adjusted in a larger scale to downside on Monday. The Dow Jones Industrial Average dropped 2.4%, and the Nasdaq Composite also slumped 3.6%. The Dow Jones Industrial Average made a 10% decline from January's high to close in correction territory for the first time in 2 years, as surging oil prices heightened concerns about inflation and economic growth. The tech-heavy Nasdaq Composite falling into contraction regime by declining to 20% below its November high last year. Today's stock benchmark in Asia-Pacific region fell sharply too, with Japan's Nikkei shed 1.7% to close its lowest since November 2020. The mainland China's Shanghai Index and Hong Kong's Hang Seng Index both fell more than 1.5% today.
Well, Korean stocks continuing to fall today as well, but not as much as some other markets. Shares of Samsung Electronics closed below 70,000 won. Not all the big names were down, though, and there were some bright spots like biopharmaceuticals. Tell us about the domestic market.
Domestic market have retreated over 3 straight trading days, including today. As you said, Devin, even with negative returns for domestic market today, domestic markets did relatively well compared to other major markets. The benchmark Kospi retreated 1.1%, and Kosdaq also lost 1.3% today. As the war situation worsens in Ukraine and longer than expected war is gaining momentum, domestic market is much affected by Ukraine war, like other markets. Most of large cap stocks traded lower today. Samsung Electronics lost 0.9%, and the second largest cap stock, LG Energy Solution, also lost 0.9% today. Investors, particularly foreign investors, led both Kospi and Kosdaq's markets retreat by about 550 billion won net sales.
Well, the Korean currency's been depreciating somewhat sharply against the U.S. dollar recently. Now the exchange rate above 1,231 to the dollar. Some expect that could reach 1,250. What's driving the exchange rate higher, and how might that affect the economy?
When geopolitical factors dominate financial market, investors' fear demands more U.S. dollars because the greenback is seen as a haven asset for its status as the world reserve currency. So the war in Ukraine is quickly raising the value of U.S. dollars over almost all currencies now. The $1 exchange rate has increased about 41 compared to the before Ukraine war. Also, there has been 2 months of trade deficit until January in Korea. This was another factor that raised $1 exchange rate. As of now, it is quite difficult to forecast the path of $1 exchange rate because of uncertainties of Ukraine war. But actually, this higher $1 exchange rate is a good news to boost up Korean export, which is the strongest driving force to recover Korean economy after a pandemic.
Right. Well, finally, Professor, the price of gold continues to rise and just on the cusp of $2,000 an ounce now, the highest it's been since about mid-2020. What might we expect to see happen with gold?
Gold price actually has been pretty stable and weak before the Ukraine war. But as we talked about, investors' fear on Ukraine war rallies all safe haven assets, including gold. On Monday, gold rose 1.5% to $1,994 per troy ounce, its highest settled value since August 2020. Before the Ukraine war, gold was traded around $1,880 per troy ounce, but its price moved up by $114 per troy ounce in less than 3 weeks. Since it is very difficult to expect the war in Ukraine, the gold price will be more volatile until the war settles down.
It does seem that way, Professor. We'll have to leave it there for today, though. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much, Devin.